guys, welcome to another episode of Really Social Estate. Before we start this phenomenal interview with Ellie Perlman, you're gonna see we're gonna get so much information, so much tremendous value to learn how she went from coming all the way to the States from Israel and building this real estate empire with currently 2,000 units under management. So, but first of all, I want to give a shout out to my good friend Matthew Baltzell. He has this phenomenal podcast that you should go and check it out. It's called The Real Estate Journeys. You can find it on iTunes. Basically, they're talking about how to get a wake-up call and help you to build your cash flow real estate empire you deserve. This is all about the real estate investors who have escaped the soul-crushing 9 to 5 rat race by taking action, leveraging relationships, and gaining that financial independence they financially deserve. It's time to stop making excuses and get the insight and knowledge you need to become a successful real estate investor. So this podcast is definitely for you to go and check. So make sure you go and check it out in iTunes. I'm sure you're going to find it all over the place. SoundCloud, podcast, Breaker. Just go and subscribe it. It's tremendous value this man is providing. So big shout out for you, Matthew Bolsell. Keep crushing, keep doing your thing. And let's go and start this phenomenal interview with Ellie Perlman. So another very special show. And today I'm very excited for this one. As I told Ellie before we started, I just love seeing ladies getting involved in the real estate space. They're doing some phenomenal things like this lady who is sitting here today in front of us. She accomplished so much. And as you're going to see here in a second, I'm just going to read through the bio and you will see exactly what I mean. Probably hear more than see, but Ellie Perlman sitting here in front of you today. She's a real estate investor who owns multifamily properties across the US. Ellie is the founder and CEO of Blue Lake Capital. That's Blue Lake Capital, a real estate investing firm specializing in multifamily investments. At Blue Lake Capital, Ellie helps investors grow their wealth by investing alongside in her large multifamily deals. She also leads a mentoring program, Ready to Scale, where she coaches people to become multifamily syndicators while building a syndication business and scaling it. So she started her career as a commercial real estate lawyer, leading the real estate transactions for Israel's largest real estate company. Later, she transitioned to a property manager role and oversaw properties worth over $100 million. So, and it just continues. It says Ellie, holds a master's in law, MBA from MIT Sloan School of Management. I don't know if that's going to be, going to be coming up in the conversation, but she's a Forbes author and a real estate investing podcast host. So you should go and check it out, her podcast, because it's pretty insane. She's bringing a lot of wealth of knowledge, in real estate investing. So you should go and check it out. And as always, you're going to find a link below for that. But first of all, I just want to say a big thank you for being today on the show. And I'm sure we're going to have a good time in here today. So thank you, Ellie.
Yeah, absolutely. It's absolutely my pleasure to be here today.
Thank you. I really appreciate that. So listen, for the people who are watching, you maybe first time, they kind of discovered you like, well, it's a beautiful lady sitting in front of us. She's a real estate investor. So maybe she can tell us the journey, because before you have, of course, the master's in law, and you kind of pursue, the path of becoming a lawyer, So how does somebody who's doing the law, transition into real estate investing?
That's a really good question. My journey begins in Israel. I grew up in a very poor family, and I had to, work. I remember first work I've done was cleaning houses when I was 9 or 10 years old to support my parents. And so that kind of instilled that desire in me to get out of poverty and become self-sustain, have a self-sustaining career and take care of myself.
Mm-hmm.
And that was a driver behind every decision that I've ever made until today. And I don't think it's ever going to change. Doesn't matter, when you're coming from a really tough background, even when you're super successful, you can be a millionaire. It doesn't matter. That fire is never going to go away because you grew in a certain environment and that shaped your personality, it shaped your reality, no matter what you do and how successful you are. And at some point, I realized that education was my way out. And that's why it took me a few years to get into law school. And I was taking care of really, really big real estate deals, and I enjoyed it to some extent. But at some point, I realized that, hey, I'm actually not in the right place, because I was representing clients that were building beautiful projects in Eastern Europe and buying multifamily properties and buying offices. And I said, hey, wait a minute, wait a minute. I want to be my clients. This is how I'm going to build wealth, not by billing by the hour, because when I'm sick, I'm not billing anything. I don't have any income. But my clients, doesn't matter
Yeah.
what they do, they have steady stream of income. That was the first time that I actually realized the beauty in real estate. And I've decided to quit my job as a lawyer and transitioned to a property management role, because I wanted to really learn how to manage
Hmm.
properties. And I did it for about 5 years. And after that, I realized, okay, the next progression in my career is to learn the business side and understand financial reports, understand marketing, and how to start and scale companies. And at that point, I think I was 30 years old. I moved to the States and I went to MIT and I got my MBA degree. And shortly after that, I started buying real estate. And I basically, use my education and experience as a lawyer, as a real estate lawyer, as a property manager, and my education from my MBA program. It was a great 2 years back in Cambridge in Massachusetts, because I was exposed to the tech side and how to start businesses, and I kind of implemented everything in the company Blue Lake that I've
Interesting.
started. And we own over 2,000 units across the US. We
Wow.
basically buy properties in strong locations that need a little bit of love, so we renovate the interiors of the units. So for instance, we'll come in and we'll take out the carpets, because in the US, carpet is kind of a dated, kind of an old fashioned
Hmm.
flooring, and we're going to put some wood floor or vinyl floor, which is a very cheap um, semi, not really wood flooring, but it's
Yeah,
a
yeah.
great substitution. And we're going to replace, for instance, all the white appliances and bring either black or stainless steel appliances, paint the property, and basically make it look a little bit nicer, so we can say, hey, the average rents are $1,000. We're going to put some money and improve the property, and now rents are going to
Hmm.
be $1,200 a month. And
Yeah.
that's how you create wealth, and that's basically what is driving our cash flow.
It's part of that, right? It's part of the creating
Hmm.
wealth. It's increasing the NOI,
Yeah,
which is net operating income of the property. And that's how we
absolutely.
increase the value overall, because multifamily is
Hmm.
based on a, NOI more than appreciation, right? So
Yeah.
talking about, because you took us, 200 miles an hour right now from where you started into where you are right now. If you kind of go back into where you started, because that's what I would like to take it apart a little bit, just for people to see, because now what they see is just this successful person sitting in front of them with 2,000 units under management. Is like, whoa, like it's hard for them maybe to digest these type of numbers, because there's a lot millions, dollars under your management. I'm sure you have a team that, helps you to do that as well. But like, how does somebody get infected with that bug? Like, I need to create the wealth, not just for myself, but the people who are, around me, and just, like, is it the books? Is it the people? Like, how did it happen for you?
For me, it was just my reality, just growing up in that environment, and the uncontrollable desire to not be in the same place ever, ever, to do whatever I can not to be in the same place where, we had food delivered to us that was basically donations before the big holidays in Israel, because we couldn't really afford buying, food in several times. And so just not be in that place, and succeed, because you wanted to improve your life and improve, from becoming the bottom, from living as someone who's in the bottom of society. You want, at least that's what I felt. I felt that I had to push myself out, and I I had to take care of myself, and I had nobody really to trust because no one would take care of me. Of course, I had my parents, they were loving
Yeah.
parents, but financially I had no back. I had to create myself and reinvent myself over and over again until I found I was on the right path to
Yeah.
create that, financial stability. And that's where it comes from.
Wow. That's very powerful. And I want people to understand that how powerful that is because, we're not going to talk about the mindset a lot, but like anybody who came across, people in the mindset industry kind of, so you already know that people operate in two ways. They either get pulled by something big, some enormous goal in front of them, or they either get pushed by this enormous problem, which
Hmm.
that's what it was in your case. I think you probably had some goals that you set up for yourself as well, and that's where you came to the States, and that happened. But those problems definitely are a big motivator for a lot of people, definitely for me as well. So
Yeah, and I think, some of the listeners are probably looking at everything that I've accomplished and saying, "Oh my God, how can you really go from zero to where you are right now?" But it didn't
hmm
happen overnight. And
yeah,
definitely, my goals evolved and changed all the time. So when I was in my early 20s, making $3,000 a month was the absolute goal for me. That's what I
yeah,
saw in front of me. And my focus, it wasn't to become a multimillionaire or to own 10,000 units or whatever it is. The goal was, okay, I want to go from earning $500 a month to $3,000. Now, this is ambitious, but it's also achievable. And that, when you really, when you have a goal that is ambitious and achievable, you can actually get it. And then once you get it,
yeah,
you say, okay, I got it. It wasn't, I accomplished my mission. Now, okay, what's the next goal? And from there,
yeah,
it's easy to climb instead of being at the very start and say, oh, I want to own a billion. I want to own $1 billion, worth of
yeah, yeah.
properties. Okay, that's great, but you need to start at the level that you can almost feel it, almost touch it, because then when things are going to get tough, and they always are at some point, it's very demoralizing because the goal is so unattainable when you just start.
Yeah.
Many people just give up.
Yeah. It's like climbing an Everest, like you need to start at the bottom, you know. And
Yeah.
for some people, they're already thinking like you still need to visualize, because maybe that's another part. Like you need to visualize climbing and reaching the top. But for some people, if you're starting at the bottom, like because that's where I started, it was even impossible for me even to visualize the top.
Hmm.
So so that's what it takes sometimes, to go from that 500 to 3,000. And maybe you can give a few tips. How did you do that? And the reason I'm asking, because prior to interview starting, I mentioned, if we just talk about the corona, what's going on, and I think that could be an important message for people, because as you know, currently I'm not up to date with what's going on in the States. Last time I heard that 22 million people are unemployed currently. So I'm
Right.
pretty sure it's huge numbers all over across the world, and it's a it's kind of shame what's going on right now, and hopefully things are gonna go back to normal. But people kind of now are forced, maybe to learn new skills and maybe to get the mindset, So and that's why I wanted to have you on again, because real estate is definitely an answer. Getting another income source, which we of course can talk about that. But first of all, how do you put yourself in a state of mind when you're earning $500, let's say, like in your case, and it's like, okay, now I'm gonna start earning 3,000 a month. How does it happen?
Yeah. Very interesting question. I think and it all starts with a mindset, but it's not enough to have just the right mindset, because a great mindset without an actionable plan will lead you nowhere, right? So,
Yeah,
I mean, looking at everything as an opportunity to grow and say, okay, this is the situation right now. How can I protect myself so the next time it's going to happen? And I'm not saying that another pandemic is going to happen, but we will have multiple recessions moving forward because it's
yeah,
cyclical, right? We have every 17 years, there's another recession. How am I protecting myself now? So when the next recession hits, I'm not going to be, my assets are not going to, if you're investing in the stock market, are not going to get 15 or 20% hit, which My 401k did, by the way, which I have a very small amount there because most of my wealth is in real estate, and my real estate valuation has increased. But that's one, way of getting impacted by the pandemic. But it
Yeah.
starts with the right mindset of saying, I have two ways of look, and I think people are generally, they're one of two types of kind of thinkers. Either you say, this is a very difficult situation, you let it affect you in a negative way, and you feel desperate, you feel scared, and at times it's okay to feel like this. But if this is your ongoing mindset, it's kind of a self-fulfilling prophecy. This is what's going to happen,
Yeah.
because it was easy for me at a very young age, and I was also married at the age of 19, and then things were really bad, because I didn't have even enough food to sometimes buy groceries. So you do one of two things. You either say, this is the situation and it's a bad situation, I don't know what to do, and sink deeper into that negativity, or you say, okay, this
Mm.
is the situation, it's bad, but what can I do today to get myself out of this situation? Let's try and reinvent myself, or think creatively how I can become stronger. So the next time there's going to be a recession, or if I'm going to lose my job, or whatever happens, I'm in a better position to take care of myself financially. And understand that those things, those blocks on the roads are going to hit you over and over, because this is life. That's part of
Yeah.
life. And once you understand, kind of look at it as, there's a problem, we need to solve it. Look at it as a, you need to be a problem solver. That's
Hmm.
kind of the right mindset that worked for me. I'm not saying it's the only mindset to approach this, but this is what worked for me, because then when I see it as a problem, I love to solve problems. So for me, it motivates me to say, okay, this is a problem. Okay, let's go back to the drawing board. What can I do to improve, to improve my situation right now? And you brainstorm and you think of ways, but that's the first step. And then the second one is, okay, now I have a few ideas, and now let's start implementing. So even if you don't have money right now and you want to get into real estate, there's some very cheap or free ways to take the first step in getting out of the situation that you are right now. One of them is education, and education always helped me. So what you can do, you can start educating yourself about real estate, because this is now a great time. It's not a really great time to start buying right now if you haven't bought anything, or if you have no direction and no one to mentor you.
Yeah.
But if you want to start on your own, buy a $50-$30 real estate book and start learning. You can go online. There's a great website called biggerpockets.com, where you have a
Hmm.
lot of real estate investors, and information is free. They have a lot of free webinars. It's absolutely free. And I'm not affiliated with them, but
There's
basically,
another.
you can get there.
Sorry for interrupting. There's another great website that's called ellieperlman.com as well.
Also, that's true. Yeah. Or you can go to my website, ellieperlman.com, and you have
Yeah.
a lot of, free resources, templates and guides, and
Yeah.
you can read my blog. And this is the great time for, it doesn't cost anything. It just costs you your time and the right mindset
Yeah.
to start reading about it, to start processing, to start making the shift. So when you're ready to take the next step, you already know what you need to know about the fundamentals of real estate investing.
That's very interesting. I love the fact that you mentioned that you love solving problems, and that's probably why you became commercial real estate lawyer, because you probably solved some big problems, in that place. But it's very interesting, because I want to talk about one thing that you mentioned before. It's kind of, you went from, let's say in that case, from 500 to 3,000, and now you're in a position when it's like, okay, like we are not the IRS, so you don't have to tell us how much money you're making. But I mean, you're creating wealth at this situation right now with the 2,000, units. It's no brainer, right? But it's not the wealth that motivates you. So maybe if you can talk about like what motivates you right now in this current moment, if it's not wealth, because again, there's a lot of things, like money is very important for a lot of people right now, but maybe it's the wrong focus. And that's what I want to talk, maybe if you can mention like what you're focusing on right now.
Yeah, I think at first a lot of people are motivated, including me when I started. They are motivated by money because when you don't have enough, it's a
Hmm.
survival issue. So you have to have
Yeah.
money to pay the bills, to secure your retirement, to buy food. But once you're past that hurdle and you say, okay, I'm the necessities, I can pay for the necessities, then you start feeling that, okay, at this point, money is not, it's not it. There's got to be something more. And it's different for everyone. For me, part of it is taking care of my family members. Some of them, still need help. So that's a huge motivation for me. And the other part is, it's the feeling that I have a lot of potential that I can fulfill, and if I don't use
Mm.
my time and my energy to fulfill this, I don't even know how to call it exactly, but you have some potential that, and that if you're going to work hard, you can create
Yeah.
a company with X amount of units under management. And if you don't meet that goal, you feel that you have something, your talent is going the ways. And this is kind of another driver. I would say that's the second thing, to feel that you are living a fulfilled life. And part of it is take your potential and make something out of it, and really use your potential to the maximum of your ability, which is something that when I was an employee was really missing, because my potential was used only for what the company needed at that point. And I felt that I
Yeah.
had so much more and I knew I could do more. But if it didn't match what my employer needed, then that part, there was still a little bit of frustration because I know I can do more. The third part is, I would say, freedom when it comes to your time. So I work
Hmm.
really hard. I work harder than I've ever worked, but I also have control over my time. So when I feel that I need to take a few days off or the day off or whatever it is, I have the freedom to do so. If I want to, go to New Zealand, I came back actually from New Zealand a few months ago. I
Awesome.
can work remotely from there for months, and I have the freedom to do it. I can travel. I can do, I can start work in the middle of the day. Technically, I mean, I'm always working from the morning until the evening, but you have freedom because you don't have someone that can say, hey,
Yeah.
you need to work at this time from 9 to 5. And with my employees, I have the same approach. I don't care how many hours you work. I care about delivery. This is
Hmm.
your goal. If you don't meet your goal, then we have a problem. But if you not only meet the goal, you crush your goals, then it doesn't matter. You can work 4 hours a day. I
Yeah.
really don't care. It's all about getting those goals, and that's a huge motivator also, to keep really good talent.
That's beautiful. I love these three steps. I think it's going to be super valuable for people who are listening here. So thank you for sharing that. I would love to come back to
Absolutely.
the point that you mentioned about this kind of thing that you couldn't describe. It's the potential, because again, a lot of people will relate 120%. And that's why I love the story that you said, like having being in a position where it's like maybe the family is suffering, maybe there's, like situation that you've been through, yourself personally. And I've been through those situations many times myself when I was growing up. So, but there's this mythical thing called potential, right? So how does someone tap into that? Because you did that.
Yeah, a lifelong journey. It's pretty challenging. I think the first step is to find out what is kind of quantifying your potential, and it takes a lot of thinking and life experiences, going through different, I would say, careers sometimes, until you feel that what this is basically what you can do. But until you go through, I was a lawyer and then I was property manager. I went to MIT, and then, just figuring out that I used to be the star student in high school and in law school, and all of a sudden I'm in a very different school where everyone is a star. So where does it leave me? Where is my place in this
Mm.
kind of universe? And you really have to go through those different stages in life to really understand what's your potential. And I would say it's for me, what helped me find what my potential is and believe in myself that I can actually do it is by listening to people that were inspiring to me. And I started, I read Sam Zell's book, and he has a really great book called Am I Speaking Loud Enough, I think, or Am I Being Loud Enough? He's a great real estate investor,
Yeah.
and he's doing a lot of things besides real estate. And I've listened to podcasts where people were, pretty wealthy, successful people, and they were talking about what they've done. And I found it very interesting and very inspiring, and made me feel that, wait a minute, if I, I can hear them speak, I can sometimes see them speaking at podcasts, I read their books, I read their bios and their journey, I can do it. That was the first step for me to understand that until you really get close to those people, and it's a one-sided process, because they're not interacting with you, but you read
Mhm.
about them, you listen to them, it makes you feel like you can really do it, because they seem, they're ordinary people, they're extraordinary because they've achieved a lot.
Yeah.
But it's very inspiring, and this is how you start finding, that's what I did, and that's how I started kind of finding real estate very attractive. I really enjoyed listening to those investors, and that kind of what shaped my view of how I wanted to build my wealth.
Yeah.
And
Yeah.
it's
That
it's
that
it's a very difficult,
I know, I know, I know.
question. But yeah, that's how I did
You
it.
you're handling it very well, by the way, so don't worry about that. But yeah, I know. So it's kind of those type of topics where we can like wander off into the universe and start talking about, like how people tap into those things. And of course, what you said, it's so true. Like if, sometimes that's what it takes for you to go through multiple jobs and just get that, the ups and downs and the struggles. And, when the struggles become so bad, like you remember coming back to when the problems just push you so much, you're like, okay, I need to change the directions. And that's where people, probably see, changing directions, going from being a teacher to investor, or, vice versa.
Hmm.
So, that is very awesome. Thanks for sharing, about that. So it's kind of, now we're starting to learn, how you got involved into real estate. And, first of all, how did you pick like the real estate? Because there's, multiple ways that somebody can build wealth. So why particular real estate? How did you came across that message as like real estate?
Yeah. If you're asking how I found, how I kind of chose to the
Yeah.
asset class that I focused on, or real estate
Oh,
in
just
general.
in general, because probably then you
Mm-hmm.
narrow down to the asset class. I'm just guessing, but
Yeah, I mean, as I mentioned before, I was listening to real estate, investors, very successful entrepreneurs, and I understood that that was the way.
how did you came across these investors? I mean, have you listened to the podcast previously? Have you read the book, or I mean, or just came from nowhere?
Yeah, all of the above. I mean, when I was a lawyer early in my career, I already had this passion and interest in real estate, and I already wanted to be my clients. And
Yeah.
then after, when I went to MIT, I started to enjoy the entrepreneurial world a bit more and read more about investors and entrepreneurs, and almost all of them were invested in real estate. So listening to podcasts and reading books were really interesting to me, until I kind of figured, I was trying to decide which path to go. Should I start a company? And there was a potential co-founder that I could have gone, and opened a company with, or should I go with real estate, or maybe the stock market? And I realized that out of those three, stock market, real estate, or startups, I felt strong attraction to real estate. There was
Mm,
something more, I would say, stable when it
yeah.
comes to real estate. I could see it, I can feel it. It's something that I could relate to
Yeah.
much more. And I thought it was a good reason why the wealthiest people in the world have, they own real estate. And
Yeah.
so that's what brought me to real estate eventually.
Very interesting. So, okay. So once you got involved into real estate and you kind of start seeing the benefits of investing into real estate, maybe you can share some of those benefits, because I know there's a lot of people listening about, real estate investing. They hear these quotes floating around on Instagram, landlords, get, rich while they sleep and all of that stories, right? But maybe being an insider, being a, super investor in multifamily industry, maybe you can tell what are the benefits while you're investing in. Maybe we can cover actively or passively, whatever, approach you want to take here.
Yeah, I think when it comes to real estate, one of the major benefits, besides obviously getting cash flow regardless of what you do or where you are, once you make the investment, tenants are paying rents every month, so you have steady cash flow coming in every month. That's the
Mm,
major thing. But besides that, it's a wonderful tool because the government helps you buy those properties. You don't need to buy 100%. You don't need to put 100% of, down. You can
mm,
bring as little as 20 or 30 or 35%, and the rest you take as a loan from the government. And in the US, you actually have government kind of backed agencies. We call them
mm,
Freddie Mac and Fannie Mae. And you can take a loan for 10 years, for instance, at 3.5% interest rate and 2 to 5 years of interest only payments. And so it's really, I wouldn't say it's easy, but it's really helpful that the government is actually helping to get
yeah,
you those, properties. And then in addition, there's a very viable way of paying little to no tax when it comes to, at least when it comes to multifamily, the type of deals that we're involved with. Because let's say if you've invested $100,000 with me, maybe I'll take one step, you know, um, maybe I'll start from the beginning. So let's say I'm looking in Texas and I find a deal. I sign on the loan and I'm negotiating with the seller. And now I'm starting the due diligence period. It takes about 60 days. During that time, I go to my investors and I say, hey, I have this great, 200 units, for instance, in Dallas.
mm,
The minimum investment is $50,000, and everyone writes checks. And after we close the property, we start managing the asset. And after 5 years, we sell it. And so during that time, let's say you're one of my investors and you wrote $100,000 check. Usually, I would say between $6,000 and $8,000 a year is your return on a $100,000 check, and
mm,
that's the return, for 5 years. And after 5 years, we sell the property, and then you get the rest. That you get your share of this from the sale. So if you put 100K, after 5 years, you more or less going to end up with $200,000, all inclusive. So instead of paying tax on $100,000 profit, you can pay many times 0%,
well,
because you pay, or not 0%, sorry, $0,
yeah,
because you have, when it comes to multifamily, you have depreciation and you have expenses, and you tell the government, hey, I made, I don't know, $20,000 this year in profit, but I had expenses. I fixed the roof, and the property depreciated because now it's a year
mm,
older and it's worth less, even though many times it's worth more.
yeah,
And but for tax purposes, it's worth less than it was a year ago because everything is a year
depreciate,
older,
yeah,
exactly, depreciated. And so you have, on the paper, you have losses that are basically usually higher than your profit. So by the end of the day, you're not paying tax on those profits. Now, you can't do it on every property, but that's one of the main benefits when it comes to real estate. In
yeah,
addition, if you bought a property that is worth, let's say, $5 million, now you pushed rents. So your NOI, your net operating income, is higher because you have more income. Now the property is worth a lot more because the income is higher. Then you can take a new loan. Let's say the property was worth 5 million. Now you increase rents.
refinance,
Now
yeah,
it's worth, yeah, 7 million. You do refinancing. So now you take a loan that is not, it's not 80% of 5 million, it's 80% of 7 million. So
Mm-hmm.
you return the original loan and now you have a new loan, but the gap between the 5 and the 7 million loan, you can take it as distribution. So we distribute that to investors, and technically it's not profit, it's loan proceeds, so there's no tax also. So there's
Wow.
a lot of interesting ways. I just, and you can't do it with other asset classes.
You cannot do it in a
It's not
startup.
real
I mean,
estate.
yeah,
Yeah, exactly. You can't do it with startups. You can do it maybe with retail, and
yeah,
but with multifamily, this is one of the best benefits. And that's why I love real estate. You can be
yeah.
very creative, and you can build your wealth, as, I mean, you can buy one, even if you bought one building your whole life and it's a good building in a good
And
location.
it cash flows forever.
It
Yeah,
has the ability. It's not that easy. You need to find the right property manager. It needs
yeah,
to be in the right place, but you can refinance multiple times. You can help the property, maintain it, and it can cash flow over and over and over again.
yeah.
That's the beauty in real estate.
And again, your job is to find those mismanaged properties.
Mm-hmm. Yeah, exactly.
Yeah, so there's another side to that, you know. So yeah, that's very interesting. You know, again, like I love real estate myself, and if we talk specifically, because real estate is real estate, there's retail, there's offices, there's single family homes, fourplexes, and whatever. So, but that's multifamily properties we're talking, in particular. And probably, guys and girls who are watching this right now, you probably came across some people on YouTube, or if you're listening to this on a podcast, maybe you heard some people talking about investing in real estate. And of course you can create wealth, but I'm just thinking like how fast you can do that with a fourplex. I mean, it could take forever, if you
Mm-hmm.
hold on to that. I mean, it's harder to scale because you probably came across stories yourself personally where people have 100 units in single family homes, and then it's hard to sell them. And then
It's very hard to manage. Mm-hmm.
hard to manage is like you have to sign a mortgage every time you buy a house. I mean, there's 100 mortgages, and you just sign one mortgage, and that's it. You have 100 units. So it's no brainer. It's kind of common sense, and that's why I want for people to kind of see, because it's a great way. Maybe not everybody who's watching this interview right now in a position to go and invest in those type of deals. Definitely don't recommend to go and start, as Ellie said, go and start your own deals right now, because maybe the timing and you don't have the experience, and the people are not there. But multifamily, it's something that definitely people should pay more attention, because now than more than ever, people talking about, okay, coming back to coronavirus and saying like, listen, I need to think about how do I get my second income coming in, because now people are talking about the cash flow more than before, because jobs
Mm-hmm.
are going away. I mean, a lot of small businesses are going to go away right now, and they're probably never going to reopen. We're talking about the small restaurants, stores. There's a lot of industries going to be affected by that. But cash flow producing assets, just like Ellie is talking about, is definitely a way to go. I don't know if you want to add something to that, but
No, you summarized it beautifully. Mm-hmm.
yeah,
That's right.
that's the way it is, right? So talking about your personal business, and I know like hopefully, well, by the sound that you mentioned, like your business is doing super well even in these times. I know there's occupants is hurting in some of the properties, for some of the investors out there, but that's just life. I mean, it's a little bit harder to manage properties currently, but if you're having those conversations with tenants, I'm pretty sure you're holding the occupancies, high enough. So talking about your personal business goals, because always before, when I used to talk with the people just like yourself on the podcast, I used to say that's exactly how I used to say 2020 is kind of special year. I always used to say that, and then boom, corona hit.
Yeah.
So it's still kind of special because it's a 2020. I just like the number for some reason, but because I know you probably set some big goals for your business, January or December last year, and you thought like, listen, I'm gonna get those goals, reached this year. So, but maybe you can share, are you still reaching the same goals? Are you taking a different approach? And like, where are you going with your personal, business goals this year?
Yeah, we definitely adopted when the market shifts, you have to adapt. Otherwise,
Hmm.
you're going to find yourself in trouble. So our goal was to purchase 1,500 units this year, in the year of 2020. But I can tell you that it's probably not going to happen, because a lot of deals were, I would say 90% of the deals that are out there in the market are just frozen right now. They're on hold because sellers are not, they don't want to they don't want to sell it right now. They want to improve their collections, because every drop in income
Yeah.
is going to reduce the price significantly. And sometimes we're talking about millions of dollars. So
Yeah.
if they don't have to sell right away, they'll wait, maybe 3, maybe 6 months until people are going to, until they can collect higher percentage of their rents. So we're definitely not going to pursue, the same amount of deals as we were before, because we're more careful now. We are underwriting, when we're looking at a deal, we're analyzing deals a bit differently right now. We're not including any rent increases for the next year, for instance. And it's something that before we always took into consideration a moderate rate increases, maybe 2%, maybe 3, maybe 2.5%. And right now it's 0. So that impacts the price that we're willing to pay. So obviously a lot of deals are not working, and most deals didn't work for us because we're very conservative, and I'm a very
Yeah.
conservative person, maybe because I used to be a lawyer, but we really take, very cautious approach to the deals that we see. And
Makes
many
sense.
people mistakenly thought it's going to be like 2008. There's going to be a lot of deals in the market. Now it's the time to buy at a discount. Where we're talking right now, it's April 27th.
Hmm.
There are no fire sales out there. It
Yeah.
might be months down the road when you're going to have some landlords going to be in more trouble. But right now in the US, at least, if you want to use forbearance, meaning
Hmm.
click on the pause button on
Rents.
your mortgage payments, you can do that for 3 months.
Okay.
And so you don't have a dire need from sellers to really sell right now, because they can't pay their debt, because there's a
Yeah.
way to avoid doing it for at least the next 90 days. That's one part of it. And the other part is that I think lenders and banks learned from their mistakes back in 2008. And I was a lawyer back then, so I was representing clients in front of banks, commercial banks. So I really felt the pain back then. But banks don't want to take over real estate because they don't know how to
Yeah.
manage and how to sell them.
They don't
It's
want
a
it.
liability.
Exactly.
Exactly.
They make a profit on a mortgage. I mean, that's where they make the money.
Yeah.
They want that.
Yeah.
No.
Once they take over, it becomes a liability on their books, and it affects
Yeah.
their valuation. It's a mess. So they're doing whatever they can to give, to help landlords hold on to their properties until they put things back in motion, and until everything is back, once basically everyone is back to work, and they can keep paying the debt. So that's why it's very different than 2008. We don't
Hmm.
see a lot of deals. A lot of people go bankrupt. And also multifamily is different than single family homes.
Yeah.
So the default rate in 2008 for multifamily properties was about 0.5%. 0.5%
Wow.
default. Single family home is a different story, because once your tenant doesn't pay, you're 100%
Yeah.
vacant. You're 100%, you have 100% what we call bad debt, 100% delinquency. So that's a different story. But with multifamily, even you look at the numbers. So for some properties that we own, if half the property or 40% of the tenants are not paying, only then we're breaking even. And that's
Hmm.
kind of an
Yeah.
extreme
Yeah.
situation.
Yeah.
In April, we've collected 99% of rents.
Wow.
So, and the average in the US for April was 93%.
There we go.
Last
So
time I
above
checked, that
average,
was
yeah.
about, yeah,
6%.
yeah, I would say about a week ago it was 93%. By now it's probably close to 95, because every day you have more and more tenants that are paying late but are still able to
Yeah.
pay more rent. So that's why it's we don't see that many deals out there. there's a gap between sellers and buyers right now in the US, when basically buyers want to buy properties at 15 to 20% discount or 10 to
Hmm.
15% discount, and sellers are saying no, rents collections were not that bad, it doesn't justify a huge decrease in price. And that's why a lot of the sellers are saying, you know what, we're just going to pause the sale.
Yeah.
So we were looking into some deals and the seller just decided to pause until things are back to normal, until maybe we'll wait for 3 months, maybe we'll wait for 6, maybe for 9 months, we don't know. But if
Yeah.
we don't have to sell, we're not going to sell.
Yeah. It makes sense. It makes sense for them because they want to make this, not
Yeah,
well thought out decision because they're scared, like they're uncertain what's going to happen, and they're just going to dump it. And then it's like, oh, we made a mistake about by doing that. So it makes sense.
exactly. Yeah, if you
So,
don't have to sell right now and you can wait for 6 more months, you can either sell now or in 6 months. But if you're going to sell now, you're going to sell it at a 3 million discount. What would you do? And you can still,
yeah.
assuming you can still, hold it, and you don't have to sell it right
Yeah,
away.
if you can
You can
hold
wait.
it, because if it's mismanaged, I mean, if the occupancy below the 40%, which could be like in your case, maybe that's the threshold, let's say in the worst case scenario. But if you're losing money, I mean, if it's below the threshold of
Yeah,
positive cash flow, and maybe they're looking to dump it. So that's another
maybe.
case.
Yeah,
Yeah,
that's right. There's not many cases at this point. It's a bit too
yeah.
early to see those cases.
Yeah, yeah, exactly. So I love what you said, about careful underwriting the property. So I think in the future, maybe we'll think about, hey, maybe we implement this coronavirus just in case it's going to happen in the future. Because
Yeah, it's not too
yeah,
crazy to think about it, huh?
yeah, it could be, just put some bio attack in there just in case, it's going to be 10% vacant, 10%, occupied or something. Yeah, it's pretty crazy. Like, I don't know, like I'm not from states except the flag that we have, it's beautiful, but like being from there, maybe you can tell people before we're gonna wrap this up. First of all, I just want to say I really enjoyed the show. It's phenomenal, great experience
Thank
talking
you.
with you. But being from there, maybe you kind of tell people, because there's a lot of people panicking. But again, you're seeing what's going on in there, and again, you're maybe the circle that you have. Maybe they're making decisions a little bit different, and maybe they are seeing the angles that a lot of people not seeing, because a lot of people following the media and all of that. Only the negative news. But what you're seeing currently with the corona, like, what do you think? Where is it going? How long does it last? I mean, is there any good, projections, in front of us?
Well, at least from what's happening in the US, we have the growth rates declining. We have states like Texas and Georgia. So Georgia opened up,
I heard
the
that.
economy. Texas, I think they're going to go back to work on Friday. So you have, barber shops, for instance, are going to stay closed until mid-May, but
Oh no.
a lot of restaurants and I know a lot of restaurants and other businesses are going to open, and movie theaters, I think it's 25%
Yeah.
at 25% capacity. So they are reopening the states slowly. Whether this is the right decision, I don't
Mm.
know. But I think, panicking is actually the worst thing to do, because not
Yeah.
only it affects your
So true.
mindset and nothing good comes out of it. You need to, you know, follow guidelines. When I leave, I'm wearing a mask, I'm
Yeah.
wearing gloves. And we all keep 6 feet apart, so nobody's is walking even down the street close to anyone else. I don't know about other states, but in
Yeah.
California, that's what we do. And so, panicking, I mean, this might happen again, and recession will happen for sure. So we can't just, freak out every time there's a recession and every time it feels like it's the end of the world. 2008 felt like it was the end of the world.
Yeah.
9/11 felt like it was the end of the world. And now this, because every time we've never seen anything like that.
Hmm.
I hope we're not going to see anything similar to that. But you're right, what you said earlier, we might. So panicking or letting fear control you, that's wrong, because you're going to hit one of those roadblocks at some point again. And it's all about, what do you do with it? Okay, now I'm in that position, how can I protect myself from the next cycle, the next thing that is going to hit me? How do I diversify? How do I
Yeah.
make sure I'm not going to be vulnerable? And that's kind of the mindset that that should lead us, and that's a proactive, positive mindset. Yes, there's a pandemic. Yes, it's deadly, but there's nothing you can do to change it besides obviously, take precautions and stay indoors as much as possible.
Yeah.
But freaking out is not going to help. It's about educating yourself, be more conservative when you underwrite, for instance. And this shall pass. I don't know when exactly, but this shall pass. And those who were too frightened to do anything, I think are going to miss great opportunities.
Yeah. Oh, you just nailed it, definitely, because there's a lot of opportunities for people who keeping their eyes open. I mean, and it's like, look at there's going to be a tremendous wealth created in this particular time, and people are watching and thinking like, what do you mean? Like the world is going to,
Absolutely.
going down. And but that's what happens because people who are open, just like Ellie's, like when you have this different mindset, of like, okay, listen, like be in control first of all of what's happening, so be in control of that, the inches that are around you, and then you will start to see those type of opportunities that exist even in the times like these, because in the worst times like 2008, there's so many people became wealthy probably in that time where a lot of people lost everything that they had,
Hmm.
right?
Of course,
So
you're absolutely right. This is the time, and I would say
yeah.
educate yourself, read books, listen to podcasts, go to either my website ellieperlman.com or Bigger Pockets. I also have a mentoring program, so I'm teaching people
There you
how to
go.
become syndicators and how to do what I do. And actually, we have an increased demand for my program because a lot of people understood how vulnerable they are right now, and they
Yeah.
wanted to take charge of their lives and be proactive. So when we're out of this stage, and when it's when they feel more comfortable start buying, they're going to have all the tools. So now it's the best time to learn. So that's one way of
Exactly.
doing it. If you want to learn more about it, if one of the listeners want to learn more about it, you can find information on my website, or you can go to readytoscaleinvesting.com,
Hmm.
and you can find all the information there. And if you want to kind of start educating yourself, you go to my website, Ellie Perlman. You can basically you can download a guide. It's a free guide on my website with the top critical components that every passive investor should look into when they're evaluating a deal. So whether you invest
Yeah.
with your family, with a syndicator, or by yourself, they're kind of very, very basic deal components that you need to make sure you understand when you're looking at a deal. And that can guide you, through the decision making process of whether to join or invest in that deal. I'm also a passive investor, so it's kind of, these are the things that I look at when I'm looking at other deals. And I think it's going to be very valuable.
Couldn't agree more. And you're preventing already, like you have the podcast, because I'm on your website currently, so blogs, you're very active on Forbes.com as well, I know.
Hmm.
So you do the podcast, mentoring, and another resources for people just to learn. I mean, we're talking about free stuff, so you're giving up so much for people, because again, coming back, like, look, everybody's sitting at home, and if you're watching this video, you're probably sitting at home. If not, you should,
You should,
but
yeah.
well, hopefully everything is finished while you're watching this. But it's definitely some great resources, and a couple things to mention. Like the best time to educate yourself about once that is going to be over, as I mentioned, what I'm going to do after. So the time is available now. There are zero excuses. Time is there, so you can go and actually learn some great valuable things that will put you in a position again, for the next year or two. So you will be like, okay, I know what to do in real estate space. I know how to invest. Or there's another great way you can invest passively, because I heard by talking with a few real estate investors before, they said, as far as I heard, it's a great way to learn about real estate investing as well. By the way,
Absolutely.
you're making passive income at the same time. So it's just a great vehicle. I mean, I can add more, and I hope it doesn't sound like a pitch to you who are listening or watching, but it's just the truth, because I believe it's, so much in real estate. Like, I'm not actively or passively involved into real estate, and you guys who follow me know that, but we will at some point, because for now it's all about for us to putting resources together and scaling our business. But it's definitely going to happen because we believe it in the real estate so much. But it's been a phenomenal show. I really appreciate the time, Ellie. You know, it's tremendous value, wealth of knowledge. Again, you know, you brought us today, shared some great tips about the mindset. You know, changing here because that's what it's all about: changing the mindset and the approach in the marketplace, which is going to be so beneficial. So I hope you guys took some great notes. Make sure to follow Ellie on ellieperlman.com. I'm going to add the LinkedIn, Instagram, Facebook, all the social media links so you can go and follow her and connect with her and just ask her a bunch of questions. But I want to really thank you today for being here and, you know, putting the time in and the effort and just bringing all this information for us to make sure that we can implement that information and, you know, just become better and do more in the times like these. So I really appreciate that.
Yeah, absolutely. It was a pleasure to be here, and I had a lot of fun. So I love talking about real estate, and I think, I mean, you had great questions. So some of them I had to really think and say, oh wait, I've never thought about it. So thank
Yeah.
you for that.
No problem, no problem. I really enjoyed this as well. So, guys, again, I hope you enjoyed the show. If you did that, click the like, subscribe to the channel. Again, go and check it out. Early Perlman stuff as well. And as always, I'm gonna see you on the next episode. Thank you, guys.